What an exciting week to look forward to, Niraj, after the roller coaster of last week. By Friday, I think pretty much all of the losses of the week had been erased. You were back to, comfortably above 23,000 levels. Now the question is, what next? The big event, of course, all of it bunching up on Sunday night, isn't it?
Yeah, two big events, right?
What were you watching? Actually, you could watch them one by one. By one.
I missed the French Open final, I'll be honest. But the swearing-in ceremony, I thought it was very nice. And then, of course, so late into the night, the India-Pakistan match, who could have missed that? And what a match it was, Tamanna.
Yeah. So victory on those ends. Victory in the sense that also you have now a stable government which has come into place.
It is a victory, you're right.
Yeah, absolutely. So, those none of those concerns now making its way into this next week. And just a couple of things that struck me, Niraj, if I can come in on those before we get to the rest of the piece, that now 11 berths out of 72. So there's 72 ministers in the Council of Ministers. 11 berths have gone to allies. Much lesser than what was anticipated. Because remember, we were talking about the 3:1 formula, etc. So if you count all the allies, that would have been about 15, 16 ministries. It's 11. Only 5 of the allies have made it to the cabinet. Most of your faces are being repeated across 3 terms. So basically, if you look at it this way, the Modi A team makes it to the 3rd term. One can expect not too much of a shake-up in key ministries, if one were to hazard a guess. And, you cannot rule out more additions later. They've not announced the portfolios yet, but my sense is they won't take too much time to do it, because then that would, raise questions.
So you reckon another 24, 48 hours?
I think so, because if you take longer than that, then the question is, why are you taking so long? Is there a negotiation? What is happening? So the aim would be to wrap it up as quickly as possible.
Yeah, interesting times and interesting week, because remember, and of course we'll get to the global news flow, but it's not just the politics. It's an eventful week, Tamanna. There is FOMC.
Yes.
There is this cabinet decision that comes out, so that is very, very important. There is CPI data that comes in from multiple countries, US, China and India. And while I normally don't think amphi data is important, considering that it was a month of epic proportions, it will be really interesting to see if India retail has kept their faith in the India story and the flows have come in, because from a market's perspective, that's really important.
Yeah, absolutely. So big week ahead, and we're going to get that global view right on top. Before we get to our special guest this morning, and of course you're seeing that implied open is showing a tick downwards, a red tick downwards. But here's what the setup was looking like globally. Major indices were off their highs on Friday trade, though they have closed the week in positive territory. The jobs data that came in on Friday was a bit of a downer for the markets, because it came in sharply higher than expected. So in terms of where the economy is in the US, that's good news. It's showing resilience. 272,000 jobs added in May, sharply above estimates. Like Niraj said, the FOMC meet later this week takes center stage, especially after, and may I add, after the ECB cut rates last week for the first time since 2019. The BOJ also, the Bank of Japan, also has a meet this week. Treasury yields, because of that job data, was up quite sharply, and the 10-year is at 4.45%. So there was almost a 25 bips uptick there. Crude prices are continuing to soften. Brent is, in fact, under $80 a barrel. And as far as Asian markets are concerned, a bit of a mixed open. We'll pull up the live Asia rates as well. Remember, China and Australia markets are shut. But as far as India is concerned, you might see a bit of a slow start after all of the excitement last week. I'm just going to quickly take you through the fund flows before we go to our special guest, and we'll just get that name up for you. You have DIs that have sold worth 1,290 crores on June 7th, while FIIs bought 4,391 crores. So that Friday sort of up move also came a lot from FIIs. Yeah,
it did in a meaningful way. And, there's a Citi note, Tamanna, which speaks about the flows that have happened from the ETF side in the week gone by. $10.7 billion inflow into equity funds, largely dominated by US, to be honest. EM funds saw about 3.8 billion, with India and Taiwan seeing large flows as well, $1.2 billion into India. So I think some bit of it that might have happened too, with the political piece out of the way. Maybe passive money starting to come back. It'll be really interesting to see if this week we see a follow through of that.
Yeah, absolutely. So we'll see where that money is coming in from. And Dean Kim is a great guy to talk about it. Dean Kim, hi, good morning. For us, good morning. Great to speak to you today. He's head of research product at William O'Neill. Let's begin with, what is the view for this week onwards now that the tsunami of events, as far as India is concerned, politically, etc., seem to be behind us?
Yeah, good to see the Indian market bounce back after a bit of volatility. It's at all-time highs now. So we do see the next support, should it stay from here, I would expect support at the rising 10-day moving average. That's about 2% below. So as long as we can, hang on to some key moving averages above the 50-day moving average, I would consider Indian market continues to be constructive. We have the market in uptrend in terms of status. And I think, the market is trending very well, of course, post the bit of volatility last week.
Dan, just wondering, so I heard you say that you're glad to see the Indian market's performance. It's an important week because there's the FOMC commentary as well. The data has been mixed. The latest round of data led to the treasury yields moving up in the US. Do you reckon equity markets could largely be quiet, even the NASDAQ? Or do you expect some bit of either upward or downward movement in global markets on the back of what the Fed will say?
Yeah, we're in an interesting spot in the U.S. I think all eyes are going to be on the, economic numbers. This week we have CPI and PPI as well as the rate decision. For the rate decision, I think the market is expecting the Fed to hold rates. The market is hopeful that the Fed will eventually cut rates in the second half. In the meantime, we're seeing numbers, that are kind of in this window of, the good news is that, the inflation number is not coming in super hot. We saw last CPI number coming in at 3.4% in April. That came in cooler than expected. But on the other hand, PCE numbers last week came in a little hotter. So it's all over the place. But I think what the market is clinging on to is the fact that the market believes that inflation will come down eventually, and then the Fed will eventually cut rates. And that's why that's why the market has been trending upwards. Now, it's going to be a major question when we do come to that point when the Fed is going to cut rates. Then we'll see what the market does. But it seems like the market is sort of building in this expectation of a rate cut. And for that reason, I think the market continues to hold up well.
Dean, just wanted to get your view on, do you think you will see more FII flows, global flows back into India? I mean, the common sense view has been that post-election uncertainty ending, you would see some of those flows being directed back here. Do you see that situation arising, or are there other factors now weighing in?
No, I think, if we were to look at the entire situation, I do expect more FIIs going into India. There's a couple of reasons. One is overall, in the grand scheme of things, when I look at the OECD leading indicator, it's been trending upwards, past few months, and we're above 100 in terms of the index at the moment. So that kind of shows the strength of, global equities, and U.S. market is doing well. Market expecting a bit of a rate cut in the second half. Europe is easing. That's why I think Asian or emerging markets have been doing well in sort of the last couple of months. Even China is starting to come up. And when I look at India, India has the fastest GDP growth rate amongst, key markets or key economies. And along with that, the OECD leading indicator showing positive momentum. Now, one thing I think we have to keep in mind is I think we have to keep an eye on the Indian yield curve. It's still flat, and so we would like to see the yield curve start to steepen. Perhaps that's going to come after all of the election activities are over, but that would be the major cue for FIIs to really come in strongly into India. But in terms of the economic backdrop for India, it's fantastic at the moment.
So, Dean, since the focus today is going to be domestically, at least the excitement is that we're waiting to see what the portfolios are. Do you have continuity in terms of which minister is running which ministry? Just wanted to get your sense on what is the expectation and view on the third term of the Modi government.
Oh, that's a bit of a tough question for me. I keep an eye on the seats, number of seats being won by the incumbent. But when the Indian market had sort of that knee-jerk reaction, I thought that was a pretty overdone reaction. And given the fact that the incumbent politicians have won some of the seats. And I think, that their policy is going to continue, perhaps geared more towards the consumers and more towards, sort of not affluent part of the Indian economy, but more supportive. And I think for that reason, I think a lot of interesting stocks are starting to bubble up.
Okay. Thanks so much for joining in today and giving us your thoughts. Dean Keane is head of research product at William O'Neill with his thoughts as well. A quick segue into the trade setup for the day today in India, and then we'll cover the specific stocks. So very likely that the markets in general for the next 2 or 3 days will be quiet ahead of the FOMC meet. So that FOMC commentary, more importantly, will be the one that I think people will certainly watch out for. And I think a lot of people have been asking that after this rally is done, is it a sell-on news? I think from a tactical perspective, Indian markets are maybe a few points away or a few steps away from being a tactical sell. So is it prudent for a derivative trader to go out and short the Indian market today? Maybe not. Maybe there could be some bit of an uptick left, there's some steam left as well. And remember, our different sectors are participating. We saw significant FI inflow. You see what Nifty IT, for example, has done the whole of last week or in Friday's session. Yeah? And you see that uptick that came into that space. Maybe some of it was directed there because if you see the delivery-based buying into some of the large-cap IT names, it was pretty strong relative to the 2-week average. And therefore, IT as well as select pharma is emerging as top contra bets for tactical traders. So keep an eye out on both of those pockets. You could argue that some bit of gain have already happened for IT stocks. So therefore, how easy it is for them to do more. But you could be surprised with the kind of ferocity that could come in. So therefore, keep an eye out for that as well. And so much of talk around derivatives and the new norms and how a whole set of stocks could come in and some stocks could give away. To my mind, just before we get to specific stocks, Tamanna, this whole list, right? Nuvama has put out, some others have put out, and Agam will talk about it in detail. But I think what's happening is great because some of the stocks on which the derivative volume and the cash volumes have been low are spoken about as the ones which will get weeded out. And some stocks in which the activity anyway have been high in the cash markets might come in. It just improves, to my mind, the depth of the market the way it stands right now. So not a bad idea at all.
Absolutely, absolutely. And I think another thing to also look out for, and I don't know, Niraj, keen to know what you think about this. How big a deal is it for the market and specifically for buckets of stocks which have benefited from CapEx, that there is continuity in the ministers handling those portfolios. So, for example, I mean, Nirmala Sitharaman has taken oath yesterday, but we don't officially know if she's going to be handling finance ministry or not. So there's a lot of speculations and guesswork. How much does that matter? How much does it matter if the railways ministry is handled by the same minister, urban development, road, highways, etc., etc.? Just is that a big deal right now as well?
For a lot of market participants, railways, Tamanna, you hit the nail on the head. Very key ministry, because a lot of stocks, not just the 4 or 5 railway companies, but the other capex ones, which are suppliers to these pockets, also very important from a continuation perspective.
Yeah.
So yes, you are absolutely right. I mean, some of those infrastructure very keenly watch out for, and what happens to whether Nitin Gadkari comes in and does that. So a lot of very important pockets out there.
And telecom, let's see what happens with Vodafone, etc. So this is going to be an important day in that sense as well. All right, let's get to specific stocks which should be on your radar, and we're going to start off with Suzlon Energy. This is something, Niraj, you and I were also talking about. Mark Desadealer, who's an independent director, resigned from his post over the weekend. Now, the reasons he's given is what could cause some worry to the street as far as Suzlon is concerned, because he's resigned citing issues with corporate governance standards. In fact, there's a quote which I've pulled out of what he said specifically. He said corporate governance standards applied did not meet his expectations, including situations where communications lacked his expectations of openness and transparency. This is from the Nuvama note. Now, the Suzlon CEO did hold a call and clarified claims that the issues raised were soft in nature and process-oriented. But you might say an initial sort of negative reaction in the stock, you reckon? Yeah,
Tamanna, absolutely. The one thing that I found, you mentioned the Nuvama note, and which is, so usually you would expect that something like this will bring a slam dunk in the stock, very well could, but the Nuvama note has an interesting mention, Tamanna, wherein they say that this management has said that, or Nuvama is saying actually, that the company is looking to address the needs of the business first and intends to implement such best-in-class suggestions in due course. So
I mean, yeah, I mean, what are they going to say? What's the CEO going to say on the call, except that, this was not a big deal, and whatever it is, we will do it. So the problem seems to be what the management is saying, that our standards are fine. What this independent director was asking for is fine plus equals to best in class, and we're going to get to best in class. But legally, we're hitting all the marks. So is that going to be enough for the street? I don't know. We'll have to see. Raymond is the other one we're talking about. They are developing a new area, I think in Bandra this time, quite a high-end suburb in Mumbai. The revenue potential is 2,000 crores over the project period. So they're moving quite aggressively in the redevelopment space, Raymond Realty, at least that section. They will pursue this project post-internal and external approvals, and it's the 4th project in Mumbai city outside existing development at Thane. So you might see some action there. RVNL was the other one, and more than this 156 crore order, this by itself is not that exciting. RVNL and RailTel also has some 80 crore order, but that's not the point. The point is really if we're going to see a continuation of the kind of up move from late last week. Thursday, Friday was all about, PSUs and policy-facing stocks really crawling back and clawing back space. Does that continue? Which is why I'd watch an RVNL.
Yeah, just very quickly. Actually, there are a lot of stocks. Aside of Emphasis, wherein the block deal at the price that will come in is very, very interesting. It's a very large block deal, and therefore watch out for Emphasis starting off lower. So keep that in mind. But Dr. Reddy's, US FDA has completed a GMP inspection at the API manufacturing facility in Andhra Pradesh. A Form 483 issued with 4 observations. So that's one stock to watch out for in the session today. Usually these stocks evoke a response which is negative. So that's one. MGL analyst meet is interesting because the company or the market had assumed that if gas comes under the purview of GST, then it could be beneficial for all of these stocks. The stocks had risen as well. Now, MGL in the analyst meet has said that they expect the input tax credit to be passed on, leaving no major room for margin expansion. Let's wait and watch if MGL reacts negatively to this. Keep in mind, brokerages say that MGL is much cheaper than IGL, and therefore it's a stock that they might want to log into. So that's the other one. IDBI Bank is going to get a refund of 2,700 crores. Borosil Renewables has approved a fundraising of 450 crores. Arts and Engineering is an EHC order of 126 crores. Watch out for these ones as well. CLSA continues to be constructive on Bharti Airtel. Tamanna says that the company's ended the $100 billion market cap club. Risk reward remains favorable. Their target price at 1540. Watch out for Bharti Airtel. My God, the list of stocks is endless today.
How much more up move in Bharti Airtel is what I'm wondering. Because remember, this is the point where the chickens have to come home to roost, which is what you wanted tariff hikes. And can tariff hikes happen now for the entire telecom sector? But, you know, all of that depends on policy continuity. Sorry, you wanted to add one more.
Just one last stock before we get in, Mr. Sanjay Pugalia, and that is PI Industries. The reason why it's important, that one of its key customers has cut the guidance. And I wonder if PI therefore gets impacted as a result of this. So certainly a stock to watch out for.
All right, we'll talk more about these stocks later in the show as well. But right now the focus is on government formation, and really now we know what the cabinet is looking like. We know what the Council of Ministers looks like. What comes ahead and what are the key takeaways from that swearing-in ceremony yesterday? Sanjay Pugalia, Editor-in-Chief, NDTV Network, joins in. Sanjay ji, you know, first off, would it be fair to say that if there was a lot of negotiation, बीजेपी और एनडीए के बीच में अगर बहुत खींचातानी हो रही थी एलाइज के बीच में, तो बीजेपी हैज कम ऑफ वेरी वेल. टोटल में सिर्फ 11 ही उनको मंत्रालय देने पड़े हैं.
एब्सोल्युटली खींचातानी बहुत नॉर्मल है तमन्ना, और इनफैक्ट मैं तो ये कहूंगा कि कंपैरेटिवली कम हुई है. सरकार टाइमली बन गई है, तेजी से बन गई है, और इन्होंने एक फॉर्मूला तय कर लिया था कि किस पार्टी के पास कितनी सीटें हैं तो उसके सामने कितना एक कैबिनेट रैंक और एक एमओएस रैंक या इंडिपेंडेंट एमओएस रैंक बनता है. तो बहुत ही एमिकेबली और स्विफ्टली हो गया. मुझे नहीं लगता है कि कोई बहुत प्रेशर रहा. ये एक नॉर्मल डिस्कशन था जो कंप्लीट हो गया, और एक कंटिन्यूटी वाली कैबिनेट हम अपने सामने देख रहे हैं.
इनफैक्ट कंटिन्यूटी की बात करते हुए बहुत सारे जो एक्सपीरियंस्ड मंत्री हैं टीम मोदी में, वो रिपीट हो रहे हैं, कई तीसरी बार रिपीट हो रहे हैं. क्या आकलन लगाया जा सकता है कि जो मंत्रालय हैं वो भी उसी तरह बटेंगे जिस पैटर्न में हमने देखा है? जैसे 2 टर्म में आपके सेम मिनिस्टर्स रहे हैं, तो ये कहना ठीक होगा कि शायद तीसरे टर्म में भी वही कंटिन्यूटी चले?
ये स्पेकुलेट करना बहुत रिस्की इसलिए है कि अभी बस थोड़ी ही देर में पोर्टफोलियो एलोकेशन का जो कम्युनिके है राष्ट्रपति भवन से वो आ जाएगा. तो बड़ा ट्रिकी है कि हम ये बता पाए कि कुछ चेंजेस होंगे या ना होंगे. लेकिन ब्रॉडली ये कहा जा सकता है कि कंटिन्यूटी रहेगी, और जो लोग लौटे हैं खास करके टॉप 4 या 6 टॉप मिनिस्ट्रीज में, इकोनॉमिक मिनिस्ट्रीज में, जिन लोगों की एक्सपर्टीज है, एक्सपीरियंस है, तो मुझे लगता है कि काफी लोग रिपीट होंगे सेम मिनिस्ट्रीज में. हो सकता है कि कुछ चेंजेस हो जाएं, तो ये स्पेकुलेट करना गलत नहीं होगा कि ये चेंजेस मार्केट को और शायद खुश करने वाले हों. यही मैसेज दे कि और एनर्जाइज होने जा रही है ये वाली कैबिनेट इन टर्म्स ऑफ एक्सपीरियंस एंड डिसीजन मेकिंग.
संजय जी, गुड मॉर्निंग. नीरज हियर. वन क्वेश्चन, क्या आप ये डू यू थिंक लाइक दैट, मैं ये समझना चाहता हूं कि अगर जो मिनिस्ट्रीज हैं वो बीजेपी के आउट ऑफ द पोर्टफोलियोज जो बीजेपी को दिए गए हों, वहां पे डू यू एक्सपेक्ट कि शायद विद इन मिनिस्टर्स में कोई चेंज हो, या दैट इफ for example an Ashwini Vaishnav is going to get a portfolio, you reckon कि उनको railways ही दिया जाएगा because of his past performance? Do you expect a change can happen within the BJP ministers themselves, and will the market worry about it?
That's what I was trying to underline, Niraj.
Ji, sir.
That if there is a change within the BJP ministers in terms of portfolio, market shouldn't worry. Market should actually be very optimistic, and it will be out in some time. It will be giving much more stronger and positive signal in terms of purpose and focus. So change of a minister from a ministry to another ministry won't signal anything else but that the efficiency and the experience is being utilized more in the other ministry. Maybe you will have more dynamic minister in the same ministry, and he will be or she will be a new face. So overall, I want to emphasize that this ministry this cabinet gives you a signal of serious continuity. Look, Mr. Jaishankar, Mrs. Sitaraman, Mr. Amit Shah, Mr. Rajnath Singh, they all are back. Mr. Gadkari, whom market loves, is back. You have Mr. Shivraj Singh Chauhan and Mr. Manohar Lal Khattar, two more chief ministers. 6 chief ministers in this cabinet, which is a very important point to note, because chief ministers come from very, very rich experience because they have run a state. A chief minister is much more powerful in many senses than a prime minister. So this cabinet is well experienced, very, very richly experienced cabinet. And I'm very sure that economic ministry will be giving, the allocation will be giving great signals to market today.
ओके संजय जी, एक और सवाल. आपने इलेक्शंस के पहले काफी ये कैबिनेट मिनिस्टर से लंबे इंटरव्यूज भी किए थे, वार्तालाप भी किए होंगे ऑफ एयर ऑन एयर. मैं सिर्फ समझना चाहता हूं कि डू यू सेंस ए पॉलिसी कंटिन्यू टू बी अ गिवन, क्योंकि मार्केट को ये चिंता है कि भाई बिकॉज देयर आर टू एलाइज राइट नाउ, कि कितने फोर्स से पॉलिसी कंटिन्यू रह सकती है. व्हाट इज योर सेंस?
These two allies, which is basically Mr. Nitish Kumar and Chandrababu Naidu, they are very experienced chief ministers and leaders of national stature. They will actually add a great value in this cabinet because states needs to change. They will be able to influence many other states to come up with reform agenda, which will help them grow faster than they are currently growing. So I see all combination coming together to create a very enabling environment in terms of economic governance, economic reform, and push to growth, which is extremely focused that it is job-led.
संजय जी, क्या ये पॉसिबल है कि आगे इस टर्म में 3.0 टर्म में और कैबिनेट का या सरकार का विस्तार हो? क्योंकि जो फॉर्मूला की आप बात कर रहे थे, जिसकी चर्चा हो रही थी, उसके हिसाब से टीडीपी और जेडीयू को अभी दो बर्थ मिले हैं, एक कैबिनेट और एक एमओएस. क्या ये आगे जाकर बढ़ सकता है और एलाइज अकोमोडेट हो सकते हैं, या ये एक फाइनल पिक्चर निकल कर आ रही है तीसरे टर्म के लिए?
नहीं, अभी थोड़ा स्पेस है. Mr. Modi can add some more ministers from the current allies and from the prospective allies. So actually, in political circle, it will be sending a signal that some new allies are welcome.
Oh, that is the headline actually this morning, that there is enough space to accommodate new allies as well. Well, the excitement is yet to be seen. Thank you so much, Sanjay ji, for joining us this morning, because we're waiting to hear, and I think that's a very important point and piece of information, that you're likely going to see the list of portfolios coming up ahead, maybe in the next few hours or so.
Yeah.
Because remember, the 5 p.m. cabinet meeting, which has been called, is still on track. Janani, our colleague who tracks this very closely in Delhi, is saying that hasn't been called off or cancelled. So if there's going to be a cabinet meeting at 5 p.m., before that, definitely you'd want to know the portfolios being handled by members of that cabinet meeting. So it's an exciting day in the markets today.
Very exciting day in the markets today. Very interesting to see how this shapes up. Well, let's take a break on that note, on the note that the implied open is stayed steady, about 20-25 points in the red, if I'm not wrong, so no big changes there. But remember, the derivative space is very exciting today, simply because there are changes afoot within the norms, as well as the quantum of stocks that could be in and out from the FNO space as well. So I think Agam will be best placed to talk about that and give you some option strategies with our guest as well. Stay tuned. We'll be right back.
Welcome. This is India Market Open. We're taking stock of the futures and options space. Now, Friday was a day where we did see advances with the Nifty climbing by as much as 2%. And we also saw a little bit of unwinding as far as futures is concerned. Moving on to the Bank Nifty, again, a 1% up move and not too much change as far as the open interest goes. But if you consider the options market at the moment, well, what we're seeing, perhaps on expected lines, a lot more writing around puts because of the 2% up move for the Nifty. Based on that, in terms of your overall open interest distribution, what we are keeping an eye on is 23,500 call is where we are looking at a good amount of open interest distribution on the higher end, which could perhaps give you a little bit of, resistance on the higher end, and lower end 23,000 where we have a substantial amount of put writing coming through. So that would be your support going in, at least based on your overall option open interest distribution. But moving on to stocks, well, we are once again keeping an eye on longs from Balrampur Chini, LT Finance, Emphasis, along with that Indus Towers. All of them looking at longs, and among stocks which are seeing unwinding, short covering for two of your large cap IT stocks, Infosys and Wipro, Power Grid, as well as Reliance. So these are some of those counters that we're keeping an eye on. But let's move on and take this conversation forward. Now that the big event is out of the way, what do we do with these markets? Well, we are in conversation with Ajit Rambia of Ajira Ventures, who's joining us on the show. Ajit, good morning. Thank you so much for joining in. Once again, let's start off with your view on your overall benchmarks. What are you doing with them?
Yeah, good morning, Agam. Thanks for having me on the show. With a highly volatile market last week, things seems to have settled down. So market participants and markets will try to align themselves with the outcome of the Lok Sabha election with the coalition government at the center. There will still be a sense of skepticism with regards to the form of the elected government. Traders should focus on stock-specific action, as we have seen multiple sector rotation in the last couple of trading sessions. Also, traders should avoid building over-leveraged positions and chasing prices and adopt a buy-on-dips approach instead. The IT sector is acting as a pillar and supporting Nifty strong levels. So, now looking at the indices, we have a support in Nifty at 23,000 levels and a resistance at 23,500 levels, looking at the open interest levels. And for Bank Nifty, we have a support at 49,300 levels and a resistance at 50,500 levels.
All right. Okay, Ajit, so let's move on and talk about a handful of counters. What's the first name on your radar?
We have BPCL. BPCL has declared a bonus in the ratio of 1:1, and the record date for the same is 21st June. So we have a bullish view on this counter. We can initiate a bullish call spread where we buy 1,610 call at 19.90 rupees and sell 1,680 call, which is the target price, at 4.45 rupees. So the cost of this strategy is 15 rupees to earn. If the price reaches up to 680, we can earn a 55 rupees in it.
All right. So that's as far as BPCL is concerned, and a spread coming in. But what is the other counter on your radar, Ajit?
Yeah. The other counter is Wipro. So owing to the booming IT sector, this counter has picked up really strong. We can initiate a bullish butterfly strategy where we buy 27 June 490 call at 10.35 rupees, sell 27 June expiry 510 calls at 4.80 rupees, and hedge it with buying 27 June 530 call at 2.30 rupees. So the total cost of this strategy is near 3.05 rupees to earn 20 rupees, which is on the table.
Okay. Ajit, just to understand the risk and reward as far as this Wipro butterfly is concerned, can you take us through that as well?
Yeah, so right now it is placed at 485. We are buying one ATM call of 490. We are paying 10.35 rupees. Our target is 510, so we are selling two calls at 4.80 rupees to cover the cost of the call bought. And as we are short two, we hedge it with buying 530 call. So we are risk free by paying 2.30 rupees. So if it closes at 510, we earn 20 rupees.
All right. Ajit, so that's as far as your calls are concerned, as far as coming down to BPCL and Wipro. Just want to ask you a broader question now. As we move into the next few days, as we move towards the end of June, of course, we're seeing an abatement in volatility, which has already come off quite substantially since the outcome of the general election. Moving in, do you think at this point in time, strategies like short strangles or short straddles would be better placed given the kind of premiums we still have at the moment? At what point in time do you think that the premiums are shrunk enough that going short on these strategies would not work out?
We generally play these short straddle and short strangles in the later part of the month. So after 15th, we generally every month play this short straddle and short strangle. And as this event is out, I think this is the right time to go for short straddle and strangle, as we are getting very good premiums. But these premiums will fall down drastically going forward. So better be quick in it and imply the short straddles and strangles right now. That's it.
Okay. So what Ajit is in fact at the moment saying is that this is perhaps a better time to go ahead and sell those straddles and strangles because your volatility is relatively higher at the moment. And later on in perhaps in this particular expiry, you're going to see a shrinkage, but even as we see your volatility come off by quite an extent. Ajit, on that note, taking a moment to thank you for joining us and taking us through your views on the markets and, of course, fielding a handful of out-of-syllabus questions as well. Overall, the other big takeaway here is that because of the fact that the big outcome of the election is out of the way, I reckon the next big event will come through in July. That's where we see the union budget. Now, a lot of positions, a lot of positional, bids will be placed based on that particular event, and that perhaps will be another crucial one. For now, while we do see an abatement in volatility going into the next few weeks and perhaps next month, that's where we start seeing an increase towards the volatility as far as July is concerned. So that is something also that one needs to keep in mind. At the moment, do remember that even back in May, we were seeing a substantial amount of positions being built in July, and keeping in mind at least some of your positional traders were already factoring in to a certain extent the outcome of the general elections and looking forward. So that's something that a lot of traders, option traders out there will be bearing in mind. Well, that's what we have in terms of your overall futures and options picture. With that, it's back to you.
Thanks, Agam. Agam, just one quick follow-up question, if you will. Yeah. This whole talk of SEBI changing the norms, tightening them a little bit, some stocks maybe potentially exiting, some stocks coming in. What have you made of that if you haven't spoken about it already? Right.
So the outcome here is that there are a lot of stocks out there which are not as liquid. The fact that SEBI comes out with these norms is that it will ensure that at least for all those stocks which are there have ample of liquidity or enough liquidity for them to have any meaningful impact as far as being in the futures and options space is concerned. Even at the moment, if you look at just the futures and if you look at the top 10 stocks, beyond that, there isn't as much liquidity, even in futures. And I'm not even talking about the options market, because the options market, sometimes the liquidity is so dry that it actually becomes very, very hard for you to exit your overall positions at a reasonable rate at which you would have made expectations, but that just doesn't come through. So a lot of that is taking into consideration the provision of enough liquidity so that you have fair enough rates to exit and perhaps enter as well. And it all starts with the futures volumes. And if we do see that pan out, eventually you will have those volumes in options as well. I reckon that this is all about optimizing the right mix of stocks which are available in the futures and options space. And let's wait and watch. Now, we've already had a lot of reports about the potential entries and exits, and I'm sure that we will have many more as well to give you an idea. And there are a lot of stocks which are being discussed, so wouldn't want to talk too much about that unless and until we have more clarity on that one. But yes, certainly a step in the right direction.
All right, thank you for that, Agam. Your implied open now showing just 10 points in the negative, but 9.5 points in the negative. So maybe you're looking at a flat start by the time we get to the opening bell. But meanwhile, Citi has come out with an interesting note on fund flows. It's highlighting the popularity of ETFs, a key source of inflows around the globe. Mahima is coming in with more details. Mahima, how does India stand out as a recipient of these flows?
Right, Tamanna. So I'll just give you a context about how FI outflows have been in the month of May and June. May witnessed an outflow of around 25,250 crores and June witnessed an outflow of around 12,580 crores. Now, the Citi note says that ETFs have continued to bring inflows, but if you see overall, FIs have preferred US and global ETFs. Wherein, if you see in the last week, we saw bond funds saw an inflow of around $17.8 billion US dollars. However, equity funds saw an inflow of $10.7 US billion dollars. From this $10.7 US billion dollars, US and global ETFs saw $7.7 billion US dollars and $3.6 US billion dollars inflows respectively. However, in terms of India and Taiwan, they too saw inflows. However, Taiwan saw more inflows than India. Out of the $10.7 billion dollars, again, India saw an inflow of around $1.2 billion US dollars, whereas Taiwan saw $3 billion of inflows. And in terms of outflows, foreign selling was seen at around $1 billion in India in the last week, and Taiwan saw around $3.5 billion of outflow. In terms of other markets, Europe and Japan funds continue to see more net redemptions. In terms of China saw a $1.1 billion US dollars of outflow via northbound connect, and Hong Kong saw $4.3 billion of buying from China via southbound connect. So this is the overall view of what the Citi is saying about ETF outflows and inflows.
All right, thank you for that, Mahima there, very nicely contextualizing the ETF flow situation. Soni Patnaik joining us this morning, AVP at JM Financial Services, so is Avinash Gorakshakar, Director of Research at Profitmark Securities. Welcome to both of you and a very good morning. Soni, let me begin, with your take on what kind of opening we're expecting after the blowout recovery that we saw on Friday, Thursday and Friday. Can we say party to abhi shuru hui hai, or is there going to be some sort of cool off?
Hi, good morning, Tamanna. Thank you for having me on the show. I think Nifty has, seen the highs of around 23,320, and its previous all-time high was 23,338. So I think it's a no-brainer that Nifty may see some resistance around 23,350, and any fresh upside can only be seen above that level. So I think if it's able to cross that resistance, we can see further upside towards 23,500, 23,600. But however, if it is not able to cross, there could be a temporary double top formation around those levels, and there could be some cool off, which can bring down Nifty towards 23,000, where the maximum open interest lies. And also it can be seen as a good support for now, because a weekly closing was above 23,000. So it's going to be very important to watch out for these levels. Fresh upside or fresh buying should only be considered if the resistance of 23,350 crosses. Above that, one can see towards 23,500. On the call side, the highest open interest is, it's concentrated around 24,000 call option, but then that's a bit far-fetched from current levels. So I think it's better just to wait for the resistance to cross or wait for the cool-off to happen towards 23,000 support. That also becomes a good buy on dips of a sort of a strategy. I think these are the levels to watch out for.
So that's the story for the Nifty. What about on the bank Nifty, Soni? We are not far from 50,000 levels at all. Do you see that being breached this week itself?
I think Bank Nifty has a slight better chance because, 49,000 is holding as a good support. And from there on, you can see that 50,000 can cross. It's not exactly a very strong resistance for Bank Nifty to begin with. The crucial resistance for Bank Nifty is somewhere around 50,700 to 51,000. So there could be a good move in Bank Nifty that we can see, keeping a stop loss or a support of 49,000 from current levels. So I think any dip towards 49,500 can be the level one can initiate longs in Bank Nifty, keep a stop loss of 49,000, and it can bounce back towards 50,500, 5700. That is the area one where one should definitely look forward to booking profits.
In light of this, Sony, then, good morning. What are the specific stocks that you're recommending?
Good morning, Niraj. My first pick would be from the metal space, that is Tata Steel. We've seen a fresh range breakout in Tata Steel. It's after a long time we're seeing these levels, and there it was a resistance around 166, 167. It's easily broken that very comfortably. From current levels, it can test 190 levels as a target, keeping a stop loss of 174. So I think that's a very good, and it has also seen very fresh, aggressive long built up on Friday's closing as well. The second pick would be in Indus Tower. Indus Tower also has seen strong short covering on Friday basis. So from current levels, one can buy Indus Tower. It can head towards 365, 370 levels. There's a good support of 340, 338. So keeping a stop loss of 338 and a target of 365, 370 can be seen. Alternatively, one can also participate in Indus Tower June series 360 call option, which is quoting around 10, 10 and a half. Can buy it in that range, keeping a stop loss of 6 rupees and a target of 14 to 17 can be seen.
Okay. Thanks for those ideas, Sony. Avinash Gorakhshekar with us on the fundamentals as well. Avinash, good morning. Thanks for joining in. A lot of newsmakers in the session today, Avinash. So I'll start off with some of those, right? Everybody's talking about how pharma is emerging as a bit of a trend changer along with the IT in the last few days. And pharma has a clutch of news flow to it. So one, are you buying into any of the pharma names? And two, specifically on Dr. Reddy's with the Srikakulam unit getting this Form 483 with 4 observations. What's the likely impact?
Yeah, good morning, Niraj. As far as Dr. Reddy is concerned, I think there is definitely going to be a slight negative reaction to the stock today morning. But I think clearly, I think we would like to wait for the management commentary as to how negative this impact would be. Because this has been a kind of a, slightly negative surprise, which the markets and most of the analyst community was not expecting. So I think, we'd like to take a cautious call here. I think anything serious could definitely mean some more damage. But I think clearly our sense is that, unless and until we get the management commentary, I don't think the markets are going to give it a thumbs down completely. And as far as the pharma pack is concerned, I think we are looking at companies, which have got large exposure to the US market, something like Sun Pharma or typically even a Torrent Pharma. I would believe that, now conditions in the US market have improved a lot. There are very little FDA issues, and I think margins are definitely going to get better in the next, say, 1 or 2 quarters. And I think that's what the market is looking at. So typically companies which are largely globally positioned in the US markets could benefit a lot. And most importantly, overall, if you were to ask me on the broader market, I think now the cabinet selection is going to be a key trigger point. So, I think Tamanna asked what is the view on the market previously to the previous guest. My sense is, once we get to know the cabinet allocations, I think the markets could again take a very strong re-rating kind of turn, which I think it looks to be very much possible in a couple of days.
Vinash, quick follow-up on that. If the cabinet allocation becomes trigger point today, what are the key points that you are looking at, or the key factors or key ministries that you are looking at?
Tamanna, I think clearly, Home Ministry, the Finance Ministry, the Railway, and the Defense Ministry, these are going to be critical sectors. And I think if there is continuation in these, ministries, then I think the markets are going to give a big thumbs up. Specifically, just ahead of the budget, I think if we can get similar faces and similar portfolios for the same, ministers in the previous regime, then I think the markets are definitely going to first focus on these 3 to 4 sectors. I would personally believe that, it seems to be well orchestrated that the BJP is going to get major portfolios. And at least as of now, the coalition seems to be moving very smoothly. I think once the cabinet allocations are known by the market, the second point to be noted would be what would be Mr. Modi's 100-day agenda, and then obviously the forthcoming budget in July. So I think once these allocations are announced, my sense is I think the markets would get a good bump up based on the fact that markets would be happy that there's going to be a lot of continuity in policies. And I think the markets would be looking forward to the budget in July.
Yeah, so, there was an interesting headline this morning to explain very succinctly, I think, the swearing in yesterday, saying that the third term, Modi starts the third term on his terms. So I think the BJP at least would be happy with what they have managed to put together. Not too much of a compromise in terms of allies. But let's get back to what stocks should be on your radar this morning. Kanika joins in with the list of top stocks that should be on your list. Yes, Kanika.
Good morning, Tamanna. So the first stock on my list is Raymond. Now the company's real estate division is selected as the preferred developer for redevelopment of Mumbai residential area in Bandra. Now the revenue potential here is in excess of rupees 2,000 crore as mentioned by the company over the project period. It is key to note that in FY24 the real estate division's revenue was rupees 1,600 crore and the company will pursue this project post internal and external approvals. This is the fourth project in Mumbai city outside the existing development in Thane. The second stock on my list is Borosil Renewables. Now this solar glass manufacturers board has approved raising up to rupees 450 crores via rights issue of shares. Now the company had a loss of almost rupees 53 crore in quarter 4 of FY24 versus a net profit of rupees 10.5 crore in FY23's quarter 4. And the final stock on my list is Ward Wizard Innovations. The company has received order worth rupees $1.29 billion from Philippines company Bulea International for electric vehicles. Now through this strategic partnership, both companies will bring innovative EV technology to Philippines to revolutionize the public transportation system in the country. Now, the company will be delivering products from its existing portfolio, including electric two-wheelers, three-wheelers in the commercial and passenger vehicle segment, and it will also develop four-wheelers for commercial vehicles for the Philippines market. Back to you.
Right, thank you for that, Kanika there with all of those stocks on the radar. Sonia, I just wondering if Raymond is something that you like at all. Their realty business is growing, but more in the redevelopment space. It's been not a favorite, I would say, but do you see potential here?
Definitely. I think on charts, Tamanna, we can see that it has given a very strong breakout packed with volumes. The breakout has come above 2355, and that is going to be an important crucial support on technical charts. The stock can see a minor dip today. It is very likely that around 2420, 2430, that levels can be seen. So around those levels, one can initiate a buy, keeping a stop loss of 2350 and a target of 2600 can be seen.
All right, that's the story on Raymond. Avinash was wondering whether you had a view on Raymond?
Yeah, I think, Tamanna, I think Raymond should do remarkably well because considering the fact that, they've got a very large land bank and a very promising kind of location. Clearly, I think FY25 should be a lot better. And I think real estate markets are doing pretty well. Inventories are moving pretty fast. More importantly, I think the real impact of the, inventory getting reflected into revenue would get reflected in FY25, possibly from the third and fourth quarter of this year. So my sense is, that this is definitely a big positive for the company. In terms of redevelopment, I think they would definitely make decent margins. And I think most importantly, most of the cash flows would get reflected from the current year onwards. So I think, yes, if a long-term investor wants to invest, I think he can definitely look at Raymond. My sense is that the next 12 to 18 months, the order book visibility is very strong. Margins are going to get enhanced. And I think most importantly, this event was, awaited for a very long time. So I think now the monetization process is going to start from the second half of FY25. So definitely longer term prospects are good. Any dip in today's market, hopefully, in the early trade can be used as an opportunity to accumulate.
Okay. Maybe we take a break because a lot of stocks to be discussed as yet. We haven't spoken about Suzlon thus far with Avinash. We need to talk about what will happen to IDBI with this kind of refund as well. Does it evoke a response? So much to speak about. But we also need to slip into a break. But for a few of those who missed out on a monumental day for India yesterday, both on and off.
Welcome back. You're watching India Market Open in just a couple of minutes left for the first pre-open rates to hit. Really curious to see how the market responds today. I mean, the GIFT Nifty is indicating a very, very flat start, and perhaps the big trigger yet to come when you will have portfolio distribution details come out. But ahead of that, what is the kind of trade that you need to set up? Avinash Gorakshakar and Soni Patnaik are joining us right now. Soni, I was wondering if there would be any kind of a strategy you would adopt on the IT stocks. And I'm saying that because the kind of run-up we saw on Friday was astonishing, fueled in part by the ECB cutting rates. You have, the FOMC meet this week as well. But is there a short-term sort of a play over there?
Absolutely, Tamanna. I think IT is one sector which has continuously seen momentum for this series, and going forward, individual stocks, and especially if we put out all the large cap heavyweight stocks over here, I think they are looking pretty well on charts, especially Infosys, TCS, Wipro. But my first pick would go in Infosys, which is looking very strong. It has given a breakout above 1500 on Friday. It's an option chain, good breakout. So I think going forward, 1500 is going to act as a very strong support. And from current levels, one can consider a buy, keeping a stop loss of 1500 and a target of 1600. 1580 to 1600 can be seen.
So Infosys is a top pick over there in the IT pack. What about you, Avinash? Anything that you like in this space? Or, you would wait for some time before entering?
No, I think, Tamanna, we continue to be positive on, Tata Technologies. Our sense is that it appears to be quite attractive, from a longer term perspective. And I think despite the fact that the previous quarter numbers were slightly, weak to moderate, the commentary was quite positive. So I think Tata Technologies at the current level can be accommodated. But I think clearly, we would be betting on large infrastructure and capex companies like L&T, typically even auto companies like Mahindra and Tata Motors. I think here the traction seems to be extremely strong, and I think we could see very strong quarterly numbers even in the first quarter of FY 24-25. So I think we'll prefer to be a little cautious on IT, but Tata Technologies is a top pick.
Yeah, Tata Technologies is an interesting play. All right, first rates have hit, and it's looking like a very flat open for the markets overall, at least on the Nifty. What's doing well in the first rush? And remember, all of this will settle. But ONGC, Power Grid, NTPC, I'm just trying to spot if you're seeing your government-facing stocks doing well for another day in a row. And it seems like it. Adani Ports, Adani Enterprises, about 2% up on the opening trade as well. Bharti Airtel seeing a bit of a slide down. Now, Bharti Airtel is an interesting story here, because you also have a CLSA note on it, which is quite positive. In fact, let's just pull up what CLSA is saying. They've maintained a buy with a target price of 1,540. That's an upside of about 9%. They say strong India mobile growth backed by management execution is driving 562 million subscribers across 16 countries. So, they also go on to say that Bharti's returns are most sensitive to ARPU, and our 286 rupee forecast versus the CEO's 300 target leaves potential for a positive surprise. So it's all about the tariffs going up, and that really is the story. Avinash, in view that the big trigger, which was let elections get over and then tariffs will go up, since that is out of the way, would you be constructive on a Bharti Airtel right now?
Yeah, I think, Tamanna, clearly, ARPUs are going to go up. And I think this is a story which I think markets were already expecting. So now with elections out of the way, one could expect some kind of news flow on this front. And I think the management of Bharti had clearly indicated that there was a significant scope for a potentially good rise in the ARPU. And I think, the industry has also recovered. I think there's a lot of consolidation which has happened. And I think a decent amount of pricing power now continues to be back with the telecom players. So I think probably you will see some action possibly by end of the month. Some amounts of ARPUs could be announced after the first quarter numbers are released. And I think that is something which the markets are also looking forward to.
Just Suzlon, very quickly, I wanted to pull up. And Niraj, this is something that you had also flagged this morning after an independent director quit, citing corporate governance standards not up to his own mark. But that stock at least 5% down in opening trade. Maybe not as badly hit as would have been expected, but we'll wait for that to settle as well. Avinash, you have any views on Suzlon?
I think clearly, Tamanna, in the short term, this could be a little bit of a negative surprise, but I don't think it's going to create any panic sell-off. See, I think the company is sitting on a very robust order book. The wind market is also doing very well. And I think once the management clears this issue, I think they should clear it in the sense that to remove any doubts in the mind of investors, specifically the institutional and the larger investors, I think things should be back to normal. I wouldn't be surprised that this may not take any major connotations on the negative side, but we'll have to wait and watch to how the management reacts to this development. Definitely not expected, but I think it's not going to create any big panic sell-off.
Viewers, if you watch the trade setup, Tamanna spoke about what the management said on the call as well. And therefore, it'll be interesting to see whether Suzlon starts off with this 5% lower down tick, which is the circuit limit, or does it do, or whether this continues over the next few days, or does it recover a little bit of lost ground? Because brokerages like Nuvama, for example, are staying constructive. So, but usually something like this evokes the negative response, which lasts for a bit. So let's wait and watch if that is how Suzlon tends to behave or no. Now we're going to get my colleagues to talk about some of the key brokerage notes, but I think one of the notes which has come out this morning is on Kaynes Technologies. Morgan Stanley's target price is much higher than the current market price, and I wonder if the EMS plays for the last few days, which have been quiet, any of these come into the picture. Avinash, one question to you, and then I'll ask Sony about some about these EMS companies, the Dixons of the world. But fundamentally, there are 9 stocks listed out there. Do you like any of them?
No, I think my guess is Kaynes Technologies and the other player, basically Dixon and Avalon Technologies. These are basically companies which I think over the longer term they're sitting on a very large order book, Niraj. I would not be surprised that Avalon looks pretty attractive, considering that they've got a base not only in India but abroad. And Kaynes, according to me, I think has moved up quite significantly. So maybe on dips one could definitely look at it. But the entire EMS space is something which is going to be in the limelight for the next 2 to 3 years. These are all largely domestic focused and export focused kind of companies. And with a robust order book, I think you need to give some time for these companies, because most of these companies are trading at fair to expensive valuations. I think only the long-term investor can make good amount of money. In the shorter term, I don't think it's going to be a big upside, for these companies. So I think it's better to, accumulate them on a portfolio perspective and take at least a 12 to 18 month kind of time frame to get a decent risk reward.
Okay, speaking of brokerage calls, like we said, so watch out for Kaynes. The Morgan Stanley target is fairly swift. And watch out for Airtel, which had this large uptick in Friday's session. And the CLSA is coming with a note, a buy call on Airtel. The stock is soft right now, but let's hear out the details of that note with Puneet, my colleague. Puneet, good morning. What does CLSA have to say?
Hi, good morning, Niraj. So you rightly said they are seeing another 8.5% upside from the current levels and maintaining their buy with a target price of 1,540 rupees, which is roughly an 8.5% upside, as I said. Now, they are seeing that, India is a really strong mobile growth market for the company, and are seeing that, execution by the management is driving the strong 56 crore subscriber base overall, out of which 40 crores are right here in India. They are seeing that since 2017, the market cap of the company has expanded 3.3 times to come in at roughly $100 billion right now. And any kind of, commentary on competitions from Reliance Jio is now awaited, and company is now in the forefront of the growth of the telecom sector. They are saying that there are three key drivers, which is its high growth as well as the scalable businesses, strong management as well as global competitive edge across the multiple verticals that it now operates in. They've also said that management's best commentary is evidence in the strong ARPU of the company, which is at 15% premium to Jio currently. When you look at what management has said, that they will be looking at strong growth as well as the return ratio metrics. So ROAS of roughly 21% by FY27 is one of the key other metrics, which will jump by roughly 9% from the current level. So it will be really strong commentary going forward as well. Now, Bharati's returns, they have said that are most sensitive to its ARPU numbers, and CLSA's estimate of roughly rupees 286 is slightly lower to the management's commentary of roughly 300 rupees ARPU by FY27, but this could lead to a positive surprise as per CLSA. Risk of any competition by Reliance Jio, as we said, is behind, and Airtel continues to offer visible growth backed by mobile tariff hikes. So overall, really strong note coming in from CLSA on Bharti Airtel. Back to you.
Okay, well, watch out for Airtel. Flat today, but a strong move nevertheless. I wonder, Sony, if Airtel gives a chance to go long on it, considering the fact that it's been a very strong stock. So does a flat day or a day of a pullback lead you to be constructive Airtel, or not really?
Niraj, on Friday, technically in derivative parameters, it has given actually a good closing. So I think 1400 is going to act as a good support for intraday. And one can see that it can head towards 1450 on intraday basis. I think that's where some profit booking may be seen. If it's able to sustain above it, you can see like maybe a positional play can take Airtels from current level to 1500, 1520 levels can also get tested. I think risk reward ratio is quite favorable. 1400 is going to act as a good support, so just keep a stop loss of 1400 and hold the stock. Positionally, it can definitely test 1500.
Okay, 1500 for this one. Very, very interesting targets there. And well, to be fair, Airtel has done reasonably well for itself in recent past, so no surprise that Sony is constructive on this one. Okay, the pre-open rates would have settled, and just from the set of stocks which would have made a move, I wonder if, for example, a Suzlon is still about 5% lower at the end of the pre-open session. So no surprise that it is doing well. Wonder if Dr. Reddy's has had a bit of a reaction to the US FDA observations. Unchanged. Okay, that is interesting. And amongst other stocks, there is IDBI, which has gotten a very large, hefty income tax refund. And I wonder if IDBI is reacting. It is 5% higher for that one as well. Nothing fundamental out here, technically or on the charts or derivatives. It's not on derivatives, of course, just on the charts, Sony. And IDBI Bank never quite really revs up too much. Would you buy it on open if it's starting off 5% higher?
I think given the gap up, it needs to sustain because it's opening very much around the resistance, somewhere between 90 to 91, that range can act as a resistance. I think it's not going to be favorable risk reward ratio wise. So I think just wait, maybe if it's showing some sort of a dip towards 88, 87.3 levels, then, it's just wise to enter in those dip and not chase any gap up scenario for today.
Just a couple of more movers in the pre-open session. Patanjali Food showing a very, very sharp up move. KEC International's got orders worth over 1,000 crores. That stock is up this morning. A positive take from Novama on CEAT. It's responding well. Motilal Oswal is constructive on MGL, Mahanagar Gas, and Motilal Oswal, the brokerage is constructive on MGL, Mahanagar Gas, 4.5% up. I also want to see what all of our TDP stocks are doing. Amara Raja, Heritage Foods, what's happening there. Look at Heritage Foods, another 8%. It's what 40% up in the last 3-4 days.
Yeah, must be.
Yeah, we should pull up that chart. Amara Raja also doing very well. It's a good morning for the Adani pack as well. Adani Green, Energy, both up, about 3.5 to 4% up. I just want to see what ports and enterprises is also doing. So you're seeing a positive move there. On the sell side, on the negative side, a Suzlon, like we talked about, is not doing too well. A PI Industries, about 2% down. You're seeing an IRB Infra also not doing too well this morning. Just want to get your take, Sony, on some of the stocks that we've talked about on the upside, especially Patanjali. I'm not sure what the reason there is for that move, but if you were holding right now, would you recommend that the position should be exited?
I think Patanjali, the gap up that it's indicating today, there's a chance that it will hold on to this gap up. And, the higher levels that it can test for the day can be somewhere towards 1560, 1580. Just hold on for the day. And if in case it's able to move towards that level, one can book profit. On the downside, 1450 can be just maintained as a stop loss and just hold on. There's a chance that, it can head towards 1560.
Yeah, and on our Heritage Foods, etc., people may have been tempted to take positions just based on the news flow. What would be your advice to them, Sony?
I think Heritage Food also is looking quite strong, with the gap up opening. However, it is very important to see if it's able to sustain this. As of now, 720 seems to be the higher end. Just wait for 15-20 minutes after the opening has been done, and there's a good support. But 660, 670 is the support where it's actually going to take a good level of defense. So I think just wait out or do not chase this gap up would be my suggestion.
Yeah. Avinash, wondering how you feel about, an ONGC and an SJVN. Some of those PSE stocks are buzzing this morning. I mean, relatively seeming like they will open in a strong space. And while we may not see too much of action, you could see a bit of a range-bound kind of trade. Do you think that this is one sector which will be in focus once again?
Yeah, I think, Tamanna, if you look at the kind of investments ONGC is carrying out and the importance for the oil and gas sector, my sense is that apart from upstream companies like ONGC, Oil India, even the downstream companies, the oil marketing companies could be in focus, because now with elections over, typically now the new government sworn in, my sense is that we could see a little bit of price improvement in terms of, the pricing for these companies. Most importantly, the automotive and aviation sectors, which are the large customers for oil marketing companies, seem to be doing pretty well. Throughput has increased, margins have improved in the fourth quarter. So definitely better kind of outlook can be seen even for the downstream companies. And I think as far as SJVN is concerned, I think the entire power space, the renewable energy and the thermal energy space could be in focus, because this is one area where in the coming budget, the government would definitely reiterate its stance of, giving some further incentives to this sector. So I think markets are probably discounting the fact that now in the coming month, when the budget is announced, you're going to see a lot of action within the power sector. So I think that could be possibly the reason, but definitely outlook seems to be positive for the longer term.
Okay, well, about 12 seconds left for the markets to kickstart trade, and Sony, Avinash, stay on. We'll just take in some opening thoughts for you post-market open. But the markets are expected to start off, I mean, either direction they start off really down, there'll be very large reactions ahead of the FOMC. So flattish start in the green, though, not quite in the red, but I mean, just about 40 points here or there. So just about 0.2% really. The banks should come up on your screen. 0.25% banks are driving this up. Wonder if IT is just kind of not quite having the kind of strong that it's usually had the last few days. Actually, no. This is the mid caps, of course. Sorry. Mid caps up about 0.6%. Small cap index, and then Nifty IT will also come up on your screen. But mid cap starting off well. Let's get the small cap index 1% higher. Strong move there. And let's get the Nifty IT very quickly. The all-time highs, of course, continue for the indices. So which is a great thing as well. Nifty IT is on the back seat. Remember, I mean, this will now become a norm. Every day that we start off higher, we'll likely start off on new, fresh record highs, unless of course the market starts off really strongly and then peters off today. What's doing well? The Adani Twins, Power Grid, Bajaj Auto, NTPC, Shriram Finance. Well, that's the net set of stocks. It's across the board, but you can see PSU still up there. So anybody who thought because of a coalition government the PSU rally is dead was wishful thinking, because PSUs are up and about. In fact, the top gainer now is a PSU stock, Power Grid, but a lot of green, very little red. Dr. Reddy's the top loser, about 0.8%. Now Infi the top loser, Dr. Reddy's, Hindalco, Infi. That's essentially IT seems to be taking a bit of a back seat, and non-IT makes a comeback. It's a very strong start, Tamanna, as we speak. The Nifty 50 is now up 0.5%. This rally is alive. This rally is kicking, and it's getting everybody participating. It's not just a specific set of stocks. You could have argued that Friday was about IT predominantly. Today, it's not about IT predominantly.
Absolutely. It's I would say, a wholesome kind of an up move, 0.5% up on the Nifty. We've hit the all-time high, crossed it above 23,400 levels on the Nifty right now. And it is a broad-based rally, as Niraj is talking about. We'll once again revisit and see what's happening on the mid-cap and small-cap before we go to specific, stocks this morning. I just want to pull up the Bank Nifty as well for a second, please, and see what's happening there. Small-cap stocks up 1% up. Bank Nifty about 50,000 as well as of now, about 0.5% up. So it's a good morning. It's a good Monday morning by all accounts. What's working and what's not? Let's start with stocks that we've been talking about. Suzlon, first one, an independent director has resigned, saying he has issues with the corporate governance. Management says, no, nothing to worry about. That stock about 3 3% up right now. Can we just move that screen as well? PI Industries, one of the largest customer, has cut their guidance. And as a result, you're seeing that stock about 1.5% down on trade, but not too badly hit really, because the mood is largely positive. CEAT is the other one that I want to pull up. Nuvama has maintained its buy rating with a target price of 3,000 rupees. 2.5% up this morning. They're excited about the FY25 volume growth, which they think is likely to be higher. RVNL, we also mentioned, a lot of the rail stocks are going to be in focus today. RVNL, one of them, they've got an order from the Southern Railways, and that is something that we should watch out for. Mahanagar Gas is the other one that, I wanted to talk about. Motilal Oswal has maintained a buy on it with a 1565 rupee target, and that stock doing well this morning in trade, about 5% up. Just KC International is the last one I'll pull up, about 1,061 crore rupee worth of orders. That stock about 5.5% up. So we've ticked the boxes, Niraj, in terms of new levels and all-time highs. But like you said, now that's expected to happen when you were poised at the tip. But overall, people are starting off slowly, positive, but a little careful till maybe the portfolios are going to be the next big trigger.
Yeah, and for today's session, for India's perspective, Tamanna is absolutely right. Just wonder if global markets per se until Wednesday will, will stay a bit quiet. Avinash, okay, let me first take the question to Sony, because the Nifty's done a very strong start. Sony, would you trade the index? It's up another 0.5%.
Definitely, Niraj. I think, it has shown that it's crossed the all-time highs. It's made new all-time highs now. So, of course, another 100 odd points left for intraday. Basically, 23,500 is where intraday resistance can become after, it just showed that it crossed the 23,350. But from current levels, just wait for maybe around a dip of 23,370, 23,360. That's the level one can re-enter the longs for intraday basis. Keep a stop loss of 23,280 for intraday. And then you can see it bouncing back towards 23,450, 23,500 levels. A risk reward gets more favorable back.
Okay. Avinash, quick word on some of these stocks which are continue to do well. Now, my question is, somebody who's missed out on this whole TDP linked stocks, right? There is a Heritage Foods, there is a KCP, there is a Ramco, and I'm not talking about a TDP link per se, except for Heritage Foods where there is a direct one, but the belief that some of the stocks will benefit. My question is, would you buy into any of these, a Ramco, a KCP, a Nagarjuna Construction, or even a Heritage Foods?
Well, I think, Niraj, within the choice of the stocks you made, I think Nagarjuna Construction, NCC, looks to be quite promising. Purely based on the fundamental aspects of the business, the order book, and the execution, and the likelihood that construction and EPC companies are going to benefit in the coming budget. As far as Heritage Foods is concerned, I think, clearly the stock has gone up purely on sentiment. I think fundamentals will now take a front seat, once the numbers come in for the April to June quarter. We have been seeing very strong numbers from dairy companies, and I think that's a good point. But I think at these levels, I think, I would be a little cautious on the remaining companies, especially stocks like Amara Raja or Heritage. NCC looks quite promising, and I think investors should understand that I think there would be ample opportunities, in the market over a period of time. It's not that, they have to buy the same stocks. There are clearly opportunities within the mid cap, and the small cap space would definitely emerge. So I think it's better to be very selective now rather than jumping the gun on stocks which have already moved up quite significantly.
So what would you suggest that people are selective on is the question. And just while you're at it, Avinash, how would you make a selection in this market? Just pointing out what's happening on Paytm to our viewers this morning. Paytm up about 8%. That stock has had a one-way run for quite a few weeks now. Would you look at a Paytm? And what are those stocks which have not run up yet, which are on your radar? Avinash.
No, I think Paytm definitely, Tamanna, after the news flow in the market has come that Adani could possibly take in a small chunk in the company. That has been the main trigger point, for the bounce back in the Paytm stock. And I think we would await some more clarity here. But I think clearly, if this development clearly materializes, then I think the markets would obviously view Paytm from a different perspective. So I think around 400 odd rupees I would not be surprised that, this could be a good value pick if one were to take the next 12 to 18 months, because I think the markets would then expect some key changes and some key more aggression, on the company's strategy and overall, increase in market share. As far as stocks are concerned, I think we still continue to be positive on, the larger companies, auto companies, specifically Tata Motors, Mahindra and Mahindra, auto companies like Samvardhana, Motherson, Sundaram Fasteners. I think these are bets which I think should do exceedingly well. And of course, the large capex, players like L&T, Cummins. Cummins, we are looking forward for the government to announce its first, hydrogen policy, which I think is going to create a lot of buzz in the market. And I think clearly numbers for Cummins were very strong. Once the hydrogen policy is announced, I think you could see a lot of action on this counter. So I think we are going to be selective initially, and probably the budget will give a clear indication as to what is the budget government's policy directive and what is the kind of focus areas for the government.
Sony, what are you spotting on open? We've obviously crossed the lifetime highs, receded a bit since then. So a bit of sell-off coming in right now after crossing those lifetime highs. But overall, what would be your strategy this morning after the open? Anything interesting that you're spotting?
Definitely, Tamanna. On stock specific, Apollo Tyres is something that I'm just keeping it on radar. So on Friday closing, it had given a very good breakout above 50 EMA. So I think that's still holding as of today's morning. One can buy at current levels, keeping a stop loss of 482 and a target of 500, 505 can be seen for the day.
What about Power Grid, Sony? Power Grid has also been having a consistent run-up. Do you like Power Grid, or do you think that now, there's really not more distance to go?
Certainly, Power Grid is also looking quite strong on charts because 300 is continuously holding as a good support. So I think as long as 300 is getting defended, Power Grid can retest its previous all-time highs of 336, 350 odd levels. That range can get tested. It's good. One can just buy at this level on any certain dip towards 314, 313. If any on a positional basis, can average it out there, keep a stop loss of 300 and look for a longer target of 340, 345.
KEC International is another one that's having a pretty good morning. Now they have some 1,061 crore orders. So overall, compared to the market cap or the size revenues of the company, not really massive, but definitely positive. This morning it's being seen in a good light. Avinash, do you have a view on KEC?
Yeah, I think, Tamanna, the company has been quite successful in bagging regular orders around 800 to 1,000 crores, and the latest order actually adds to their order book quite significantly. So I think within the power transmission space, specifically both for the domestic and for the export markets, KEC is one of those companies which should benefit significantly from the power sector reforms which are likely to be announced in the coming budget. So I think even at these levels, if one were to take a call, I think over the next say 12 to 15 months, I would not be surprised that FY25 and 26 could be strong years for the company. So I think definitely worthwhile looking at this stock slightly from a medium to long-term kind of position.
Okay, that's the story with KEC. You have a take on KEC, Sony?
So on technical charts, it just looks like there could be some sort of profit booking. So it's idle just to wait for a level of 780, 770 range to get tested. If that gets tested, one can initiate the longs on those levels and then keep a stop loss of 740. From those dips of 780, 770, it can rebound again to 820, 830.
All right. So that's the story on KEC. Thank you so much, Sony, for joining us today. Avinash, stay on, please. Just, want to get a sense from you on what sectors we should be looking at this morning and how a viewer can position themselves ahead of the big news flow today. So we know that in all likelihood, you will see the announcement of portfolios today. It will be seen as a positive boost. Perhaps not too many surprises there, but difficult to speculate at this point. But you could see a positive boost for the market and more reason to cheer. The question is, what positions would you take right now for a short-term trade?
I think, Tamanna, the PSU banking space looks pretty attractive. I think, if you look at the railway, defense stocks, these are stocks which have significantly moved. So I think incremental upside here seems to be limited, although the traction here continues to be solid. I would believe that the larger PSU banks like Bank of Baroda, Canara Bank, State Bank of India, I think these are banks which are still undervalued and where a lot of runway is available for growth. And I think once the budget is announced, you're going to see a lot of noise on infrastructure, capex, make in India. So all that is going to percolate into a large piece of business. Plus, typically, the smaller banks which operate in the MSME, SME space, typically something like an IDFC First Bank. For a very long time, this stock has underperformed. But I think considering the kind of opportunity available here, I would not be surprised that this is also one good re-rating candidate. So I think, these are selective picks which I think the market, players or, investors should actually accumulate ahead of the budget. Some good news comes on the infrastructure, corporate capex is definitely bound to, put a lot of action in these counters. And I think balance sheets have improved. The asset quality has taken a big positive kind of turn. And most importantly, they are funded properly. So all said and done, I think the larger banks and smaller banks, IDFC First Bank, these have been the picks which we have been telling our clients to accumulate, ahead of the budget.
Okay, what else? Some of the CNC stocks have done really well. Avinash, did we speak about Adani Ports? And if we haven't, would love to know your view. The cargo handling is okay. There's recent news flow as well in the stock. Any thoughts on Adani Ports?
I think, Niraj, Adani Ports is very well positioned. In fact, we believe it's a quasi-monopoly player in the port segment. And I think, if India has to grow, infrastructure has to grow, ports have to grow. And I think this is where you're going to see a very strong kind of upside over the medium to long term. My sense is that already large institutional investors are entered the stock. Even from these levels, if one were to take a 18 to 24 month view, I think visibility seems to be pretty solid. Their cargo volumes have grown up significantly. They've been acquiring, ports. And most importantly, I think this is a very stable, sustainable kind of business, which I think eventually is going to give them big rewards. So I think, any dip in the market price for whatever reason should be used as an opportunity to categorize this as a very strong portfolio kind of stock.
Okay, we'll take a very short break here. Thank you so much, Avinash, for joining us today. But we want to get, a more in-depth sort of a view on where markets are headed after the big election event is done. Portfolio distribution is what we're looking out for. What are the sectors and stocks you should be looking at? What is the outlook you should have for Modi 3.0? Gurmeet Chadda of Complete Circles joins us on the other side of the break to talk about all that and more. Stay tuned. right, welcome back. You're watching India Market Open, and it has been a good morning for the Indian markets. There's little doubt about it. Now, a few factors perhaps which are boosting sentiment. One could be the continuity which was on full display visually at the swearing-in ceremony of the third term of the NDA. Prime Minister Modi took oath. In all, 72 ministers took oath, and this includes 11 from the alliance. So there is still room to add more berths, but overall, one of the key messages that the market is taking from the oath-taking ceremony yesterday, and we should show those pictures very quickly in a bit from now, is that there is a repeat of a lot of the A team of Prime Minister Modi. So a large number of ministers who would now be serving their third term with him, stalwarts and people with a lot of experience. We were speaking earlier in this morning with Sanjay Pugalia, editor-in-chief of NDTV Network, who was pointing out that you have 6 former chief ministers in this government, so a vast bench strength and experience coming in. Also, in terms of what was being expected for negotiations between allies and the BJP within the NDA, the BJP seems to have come off fairly strong or fairly in a dominant position, because they've given away just 11 ministerial berths, out of which only 5 are in the cabinet. So your key, very crucial CCS type ministries or economic ministries could likely stay with the BJP. Gurmeet Chadda joining us now for more perspective on what we'd expect to see. Modi 3.0 officially kicks off because you've had the swearing in. What's left now is the distribution of the portfolios. Gurmeet, very good morning. And let me just start with that specific point. How big a deal is the distribution of portfolios for the market? That news is expected to come sometime during the day today. And what will be the key portfolios and the allocations that you'll be watching?
Hi, Tamanna. I think it's a more of a sentimental event in terms of portfolio allocation, unless we see very big surprises. If you see the pecking order yesterday with senior ministers taking oath, I think change looks a little unlikely. I think the key focus for a market point of view, obviously the broad sectors which are roads, infra, etc., which I think should be on steady lines. There are some news of finance portfolio being adjusted. While I think Nirmala ma'am has done a great job and steadied the ship even during COVID, being prudent with even fiscal stimulus. But any change in terms of in that portfolio with out-of-box thinking, the various names going around the corner, I'm not aware of that. But if, let's say, there is a Piyush Goyal or somebody like a Gadkari taking care of finance portfolio, market may want to see that and they could create a near-term thing. But I think what market broadly seems to be okay with is the balance. If you see of all 72 odd ministers who took oath, BJP was almost 61. So that fear of allies trying to get a plump portfolio, policy making getting slowed down, for now looks settled in my view, and I think that's a broader medium-term, long-term message markets would be more keen on, which is continuity and not enough populism but continuity in reforms. And a bigger event is the 100-day agenda which the government announced in lead up to the budget. I think those are more near-term figures. I think announcements on portfolio could have a 1 or 2 day impact at best.
Right. So the 100-day agenda is, and that's an important point, Gurmeet, that the 100-day agenda is what the markets would be looking at. Just markets come off a bit from its highs right now, mildly negative territory, and I suppose that range-bound trade will continue. Do you have a concern with the way we've seen a run-up and, valuations at these levels? Or have we now set the stage for the next leg of this bull run in the next sort of 5 years?
No, I'll agree with the latter. I don't think so. Market is at a level where we all should be concerned. We were 22,600 pre-exit polls, and then exit poll exaggerated the move, and then the election day, course corrected it, and now we are back at near all-time high, which is 23,200, 300 levels, and you are still at about 18 times. I think you have to look at it from a valuation perspective rather than from a level perspective. And I think 18 times is slightly above our long-term average, but it's not that we are in a bubble zone. Yes, there are pockets of exuberance, Tamanna. I honestly don't see PSUs trading at 60 times, just going up on order book. Similarly, there's a lot of euphoria in the listings in the SMEs in micro-cap space. There is some exuberance in even some of the railway stocks. You can't discount. It seems that the next 5, 7, 10-year news is in the price. So you need to differentiate there, right? So for example, let's say, I'll pick a name, let's say HAL. You have, let's say, a 1 lakh crore kind of an order book, of which 35% is the Tejas MK1, which is a very long-term contract. So that order book looks sustainable. And if you break it up, and let's say HAL is about 65%, maintenance and spares revenue. So there's a bit of continuity as far as even cash flows are concerned. Even then, the run-up has been very sharp. But there are a lot of names which have just run up just because there is a euphoria on defense. And I think that's the pocket you have to be a little careful about. But I don't think so the broader market has any signs of seeing a very large corrections only because of valuations.
Gurmeet, good morning, Niraj here. Does the set of stocks that you would have in either a tactical portfolio or your long-term portfolio change, get enhanced from what they were, or get reduced in terms of weightages from what they were because of this event or because of what's happened in earnings?
No, that's an excellent point, Niraj. So we are rotating a little bit. As I said, we are not exiting a defense or a railway or a PSU portfolio, but we have slightly managed concentration there. Some of our defense stocks, like some, let's say, Solar Industries, Zen Technologies, had run up quite sharply in last 1.5 years. We just brought down the weightages back to, let's say, 5-6% for solar, which had went up because of the appreciation, almost at 9-10%. Similarly, for some of the other defense and railways, we are just trying to manage the concentration risk there. And we are now trying to move towards, sectors which I think the earnings can, positively surprise. So one is financials. In my view, I think it's long due. If you see last 2 years, the EPS growth is 25-26%. And the growth is only 12%. It's largely because of FPI selling. And I think at some point of time, that selling has to abate. They're already at 16% holdings already, which is a decadal low. So we're increasing weightages there in likes of, let's say, ICICI, HDFC, going to even tier 2 banks like Federal Bank, where we think, the cost income ratio is improving. The wholesale retail mix is now like 55-45, used to be heavily in favor of wholesale advances. The CASA mix is also being worked upon with more branches. They are at 1,500 branches. So adding financials there. Similarly, we are trying to see if we can add a little bit of agrochemicals and more rural focus, because I think that's going to be a key focus area. If you see the farm GVA in the last quarter GDP print was just 1.5%, which clearly means that there is some bit of distress there, which is evident in the way even the government performed in states like Maharashtra, in states like UP, where you have a rural economy. So I think we want to get in there, have some more weightages to FMCG, the likes of the Tata Consumers of the world. Also get into some slightly farm equipment and discretionary consumer place, and add a bit of housing more. I think that's something which in my view will be a key focus area for the budget. Housing finance companies haven't done that great in last 1 year, whether it is a Home First, whether it is some of the other housing financiers. I think that could get a bit of a leg up with budget and some more announcements. Also, I think this Bajaj Housing IPO can re-rate some of the other names also, just in terms of valuations. Like, let's say, for example, a PNB Housing trades at 1.2 times with great, metrics, what you look for in a housing finance company. So that's what we are trying to do, maybe about 10-12% of the portfolio.
Gurmeet, just to add on to that, and I heard you say that there's a bit of a rotational play here to cut down risks with your economy-facing stocks, railway, defense, etc. In terms of the private capex theme, because now that's also going to be the big story. How would you play that theme? How does that translate into a stock and a sector specificity? And if I were looking at, you talked about the 100-day agenda, if I were looking at things like green energy, fuel, EV, etc., how would I play that?
Yeah, so, I think we are in a capex cycle. First, you have to be on the, side whether you are in a capex cycle or it's just a government-induced one. If you see, for example, gross fixed capital formation, that's almost now 30% of the GDP. Within that, the corporate, private corporation breakup is 35%. So clearly, gross fixed capital formation is basically the net assets, the economy creates, whether it is created by government, businesses, or the private, individual balance sheets, right? So that's growing. Capacity utilization is roughly at about 76%. So I think we are in a private sector, housing-led private capex. And that's why I said we will build some exposure in housing. through housing finance companies, through reality, also some home improvement. A lot of existing inventory got sold off in the first leg of post-COVID rally. We have had series of launches in the last 2 years, and once the civil structure gets ready in a few quarters from now, I think you will see a lot of demand for home improvement, and some of the tile makers, the sanitary makers have been a little subdued last 1 year. I think that should come back. And we continue to be in places like L&Ts of the world, where you're trying to play the broader investment and capex cycle. So we are pretty much there. It's just that, as I said, we just want to trim a little bit in terms of high concentration. Some of the stocks had become double digit just because of the run up in the portfolio, and we're just trying to bring some sanity back.
Gurmeet, just another point of some of the sectors which, and let's talk a bit about IT. Great run up on Friday, completely being hammered today in trade, not participating at all. And let's talk about autos. Autos show that FADA numbers look decent for this month. All the sales numbers kind of got, overwhelmed in the election play. But autos and IT, what is your take on these two specific sectors?
So ITs, I think we are shifting it towards from services to products. Companies who are trying to get a better mix in that range. So if you're heavily services dependent, probably you have to wait for the US to recover more and let things stabilize there more. So I think if you go for run-of-the-mill IT services, the growth, anyways, the guidance is in single digits. So you might get support through buybacks and extra cash, but in terms of business growth, the guidance is little subdued. So in large cap, because HCL has a slightly more diversified portfolio, they're working with both includes ERD as well as the software part, which I think we are a little constructive on. Very few companies have invested in the software part in large cap. So we are looking at HCL there in large cap. We're trying to add some of the niche players like KPITs of the world. There has been a healthy consolidation, almost like 6 months before last time it made a new high at 1700. I think it's a genuine theme. And, you see more software, more electronics content per car rising up from currently at 28% to almost 50% next 2-3 years. Some of the stuff they have like Eldo 4, which is their auto driving thing, is pretty good. They've really invested in that. And we're trying to get into some platform businesses. I don't probably not call Zomato a clear platform business, but I think if you see yesterday, for example, yesterday's match, there were 30 lakh orders in a day, right? So it's really, and the place is established. It's almost a duopoly now. Second, the Blinkit is turning out to be a dark horse. There's high value tickets pick up. The contribution margin, in my view, will cross 4-5% in due course. It's already crossed 3. Once it crosses that, it will start contributing meaningfully to the earnings, right, which the market wants to see over the long run. And some of the businesses like Policy Bazaars, etc. So we want to move more towards product platforms there. Auto will stick to passenger cars for now, and probably get a little counter-cyclical in some of the farm equipment names, etc.
Okay. Gurmeet, just wondering, two-wheelers in particular, though I know you mentioned that you will stick to farm equipment. It was interesting data, two-wheelers, and I'm asking this question to you because we have Bajaj Auto coming up as well. A very modest month for Bajaj Auto because they just managed to keep their head above the water. In a bad month for Hero and Royal Enfield, but with TVS doing what it does, steady state 10-12%. Within this bucket, would you choose any of the two-wheeler names, or because there might be rural pushes, etc., part of the government, or would you rather play two-wheelers via ancillaries?
So more inclined towards ancillaries, Niraj, but there is valuation comfort even in Bajaj Auto despite the run-up. The buyback obviously helped in terms of anchoring the price. But if you see, we were selling 2.4 crore motorcycles and bikes in 2019. This year we did 225. We still haven't crossed that. So which tells you that, the rural economy is not come back. So I think we play a little bit of, there is some valuation comfort there. We got lucky with TVS and TVS Holdings because of the special situation of the company getting split into 3 through Sundaram Clayton, TVS Holdings and the preference share. So there we made a decent, amount of money, not realizing it will go up that fast. So for example, TVS clearly continues to do well. The frame of the best-selling bike of TVS, which is Rider and Apache, is made by Sandhar Technologies. So we have that in the portfolio. Plus Sandhar is into locks, is also trying to build, an EV portfolio now. So the mix is not changing. It was very dependent on Hero a couple of years back, and now they have obviously added more labels there. We have Uno Minda, which is again 40% two-wheeler, 60%, and Uno Minda also has a convenience portfolio other than just, the content per car, which is switches and horns, lightings, etc. So we have that in the portfolio. And we are looking at, as I said, Bajaj Auto. We don't have that in the portfolio, but as I said, there is some valuation comfort and maybe a near-term thing which can happen, even despite the run-up in some of these names.
Yeah, okay, could be interesting, but we watch out for how the allocations of the ministries happen and more. Gurmeet Chadha, thanks for joining in today. I think we get some thoughts around that and more. That's the view from Complete Circle on their portfolio strategy. We take a break. We're speaking about two-wheelers, Bajaj Auto in particular, and that's what we do on the other side of this break. Have a conversation with Mr. Rakesh Sharma of Bajaj Auto on the monthly numbers and more. Back with India Market Open right here on NDTV. Profit Bajaj Auto numbers May was a flattish number, but rural peers of theirs as well as a premium peer de-grew too. So it was a month which is very different than what the previous few months might have been. What about the month and about the year thus far, and what about the outlook ahead on the back of we now having a new government in place? Mr. Rakesh Sharma, Executive Director at Bajaj Auto, joins us right now on the show. Mr. Sharma, good having you. Thanks so much for joining in. Maybe I'll get to the minutiae in a bit. I just want to understand whether you believe that growth per se, with the new government now being in place, the election code of conduct out of the way, do you believe growth can come back, or was growth independent of what was happening due to the election proceedings and the code of conduct, so on and so forth?
Good morning. Well, for the last few months, perhaps 4 to 6 months, growth has been quite on track, and it's secular to these issues, apart from the fact that things like elections do cause interruptions in terms of, closures and movement, etc. Very temporary interruptions. But on the fundamentally, the growth has come back on the basis of the economy being far more inclusive in its recovery to reach even the, our customers who, if I must remind you, bulk of them earn between 30 to 50,000 rupees per month. It is that category of customers. These people have started coming back to the purchase cycle. And the long drawn election was a little bit of interruption here or there.
Okay. So the flattish May numbers was a reason of a lot of those factors as well, or were there other reasons? I mean, of course, it's not just for you. I mean, for some of your peers, actually, there was degrowth as well.
Yeah, so the May industry has to be understood on the basis of, the marriage season, which is like a mini season up in north and little parts of west and east. That is this year been very highly concentrated in the month of April. Ordinarily, last few years, it is generally spread between April and June. So therefore, and that tends to really polarize consumption. Secondly, that also coincided with some of the regional level festivals like in the West, Ugadi, etc. So this combination really pushed up the retails of April compared to the retails of April last year. And you had a big spike. So if you take April and May together, the industry is in double-digit growth. I would say that June you will again see some kind of base effect again operating over there because all the marriages are over and last year they were still continuing in June. But if you put April, May and June, the first quarter together, then probably we will see the underlying growth of 7 to 8%, which has been there in Q4, continuing in Q1. That I would say is the underlying growth. And we, of course, are growing faster than that, particularly in the top half of the industry.
What about the export element added here? I mean, the 4% growth in May, I reckon, was all on the back of a 10% fall in May last year. But April, if I'm not wrong, as I read out the numbers, was about an 18% growth. How do you see that piece shaping up, Mr. Sharma?
The exports has been on a recovery path. And again, the numbers hide the story of the recovery because LATAM has very nicely come back and as having growth. 25% of our business comes from LATAM. Most parts of Asia are doing better than last year, particularly the ASEAN end, which is Philippines, etc. Though I would say Bangladesh is still soft. Sri Lanka was a little bit down last year, but even so, it is performing better than that. Nepal has come. The Middle East, despite all its geopolitical issues, is improving as we speak. In Africa, I would say, which is about 45% of our business, the big drawdown is still Nigeria. So if I were to, we operate in about 100 countries, and of that, about 30 to 40 are very, very meaningful countries. Out of those 40, I would say, apart from 4 or 5, almost all are in the recovery path. Now, the issue is that the Nigeria, which is our largest market, where we hold a 56% market share, that is still lagging behind, though there was some progress in May, but it is way below its peak. Like we used to sell 50,000 units per month in Nigeria. Last month, we sold 17,000. So that, and we had dropped down to as much as low as 5,000 units. So there is a recovery, but till the time Nigeria doesn't really come back to its old levels, you will see the overall export growth still muted. But having said that, I think we have a lot of satisfaction in the fact that some of the markets where our premium end products are going, for example, Latin America, we are even experiencing growth of 20 to 25% in our Pulsar and Tamanna range over there. So if you look at a volumetric basis, yes, it is very muted, but on a value basis and particularly margin basis, it is now very robust improvement over last year.
And you reckon we'll continue to do so as well, I presume, right?
I think so.
Yeah,
I think, I think it should, but we have to wait and watch how Nigeria, Kenya, Congo, these 3-4 countries, how they do.
Yeah. One question on a few products, right? Pulsar 400, I mean, has it reached the dealers? What's your response thereof? And also the CNG motorcycle, right? Coming back, launching soon. And it's, I was speaking to my colleague Puneet, who tracks your company very closely. He's talking about how this is a very important launch, according to him, for Bajaj Auto. And you're getting an EV one as well. Can you talk to a bit about the new and the exciting stuff, if you will, at your end?
Yeah, there is a whole lot of exciting stuff there because our product pipeline driven by our R&D is really thrusting forward. You're very right. The NS400Z was a very good launch. we are aiming it at the top end of the street motorcycles. As you know, that market is still limited, and it is our effort by bringing in these products which are far more affordable and accessible with absolutely no compromise on performance and features, etc. We will be able to provoke the Indian consumer into upgrading and getting on top of some of these magnificent bikes, and it's really a category development effort. It is also very important for us because it has a halo effect on the whole Pulsar brand, and it seizes the leadership value in the Pulsar brand. The dispatches should start reaching the dealers within a few days now, if I may say so. And but we've got a very healthy rate of bookings. Already, I think they've crossed 1,500 units or so. So everyone is really waiting, and you can see some of our social handles where there's a lot of air of expectancy. But yes, the big one, not just from a Bajaj Auto point of view, but I think if things work out right, it could be an industry redefining moment, which will happen on 17th of July, which is when we unveil our CNG-based motorcycle. It is aimed at, the bottom 50% of the Indian market. So you know that Indian motorcycle industry is almost, 1 million a month, and the bottom 50%, 500,000, and then there is some scooters also. This is a very economy conscious segment. People want, like I said, generally our customers are between 30 to 50,000 rupees per month, but this customer is is mostly centered around 30 to 35,000 rupees per month. So any saving in fuel costs, and fuel is in the top 5 expenditure items of a family in that segment. So with CNG, our proposition is to really halve their expenditure over here, which we feel should be very, very attractive. It's a bike which is not apologetic about it being, saving OPEX, but it's got a standout style. We have brought to bear all our learnings of this segment, whether it is comfort, whether it is ergonomics, etc., into it. So yes, so we are really looking forward to that launch. And on electric, we have, you referred to that, just last week we have introduced our most affordable Chetak. Chetak has been on ever since supply chain fell into place, Chetak has been progressing very, very well. And we just expanded its portfolio by bringing in the most affordable Chetak, which is priced between 95,000 rupees to 1 lakh rupees, and which is a great value proposition for people to move from ICE scooters to electric scooters. So that's already, as we speak, going to all our dealers.
Noted. Mr. Sharma, all the best for the exciting times, and maybe around some of those very exciting launches, industry-defining launches, if you will. Would love to talk to you again, but thanks for your time today.
Thank you for having me.
That's Bajaj Auto and their views. Well, as we hit the break, or in fact wrap up India Market Open, here's a word from Aadhar Housing Finance's Rishi Anand. Remember, housing finance comes into focus because of the focus on rural housing as well. And Rishi Anand talks about the order book on the back of the government's housing scheme for the economically weaker sections.
Harsh, good evening to you. Yes, it is in fact, I would say, one of the largest and the most populous scheme under the Pradhan Mantri Awas Yojana umbrella, that is housing for all. It has shown its benefits in the last 10 years. I would say more focused in the last 5 years. The benefits are very much legible, and we can view it, whether it is purely from a housing perspective or even from a subsidy to the end user. It is a scheme that is remarkable, and we are very hopeful as an industry that the government, which has announced 4 crore houses, should be able to deliver it.
Thanks so much for tuning into Talking Point. I'm your host, Niraj Shah. The markets have flattened out today. And until the Fed outcome is out of the way, very likely we'll see that kind of behavior. But the case for a chat today for our guest, well, the usual suspects, right? We'll naturally talk about whether the ministerial portfolios will have a market impact or no, or a specific sectoral impact or no. Will FPIs wait for clarity before they come in, or is the clarity enough now for foreign flows to come in, as we saw in some bits in Friday's session? And are there green shoots for consumption pickup as the market toggles between guesstimating whether some bit of the capex push will slow down from the government's end and rural recovery will also gain focus or no? We pose all of those questions and more to Gautam Trivedi, co-founder and managing partner at Nepean Capital, joins us right now on the show. Gautam, great having you as always. Thanks for taking the time out. Hope all is well.
All's good. I just got back from the US and I wanted to share also some of the feedback that I got by meeting asset allocators, fund managers, etc. So happy to.
Let's do that because the last time that you were here, or not the last time, but a few times ago you were here, you gave us a very interesting insight about US inflation. Now give us the insight on what are asset managers saying?
Yeah. As far as your first point is concerned, as far as US inflation is concerned, that's still raging very, very high. So frankly, I'm not surprised if the Fed, continues to pause on any rate cuts until they actually get inflation under control. So, but getting back on the feedback front, so I think the average institutional investor that I met still remains very positive on India from a long-term growth perspective. So that hasn't changed at all. Notwithstanding, of course, I was there before the election results. And I don't think things would have materially changed post the election results, only because of the fact that everybody that I met wanted to see Prime Minister Modi back for a third term. So that event actually has actually now happened. The second part is the reluctance to incrementally add more money to India at this point of time. I think it's a sheer valuation, which I don't blame them, because we're now at 21 times calendar 25 PE versus 9 times for, let's say, China. So if you've seen the money flow this year to date, as in from 1st of Jan till now, versus the whole of last year, India was highest in the pecking order, ex-Japan, wherein we took in a net FPI flows of $21 billion. This year, we're a negative 4.3 billion so far. And we're actually lowest in the pecking order. So if I include Japan, the pecking order now is a net positive 33 billion of inflows into Japan. Korea, surprisingly, is taken as much as 16 billion. China is 12.2, Taiwan is 6, and we are a negative 4.3. So I think, it's gone a full circle. Now, what are the questions that I did ask all of the people that I met? I said, India's historically been expensive, and especially over the last 3 years, it's always traded at a huge premium to China, over 100%. In fact, in between, it actually went as high as 160%. So I said, what's changed? Why is it that you guys are shunning India now and putting money in other markets? What they said specifically on China, they said that besides the fact that the market's very cheap, they said the Chinese government has announced a slew of measures to improve and stimulate the economy and also the property market. So in some sense, that incremental money that may have come to India has all gone into China, and that's over $12 billion, as I said. So I think that's some of the feedback that I've got. But I think I'm sure a lot of them are happy that the Prime Minister Modi and his cabinet is back. We haven't seen, of course, who's going to get what portfolio, but we'll discuss that a little later. But point I'm trying to make is that economic and policy continuity is very much there, and that's, I think, resounds very well with foreign investors.
Gautam, to your sense, a two-part question rolled into one. The fact that the new cabinet has a significantly, or not a significantly, but a lower number of ally ministers than what was earlier believed by the market or the media, as the case may be, right? So does it mean that a higher probability of policy continuity? We'll know in a few hours, but one portion of that. And if that is the case, does it augur well? Part one of my question is that. Part two, on the flows piece that you mentioned, because you mentioned that incremental flows have already gone into China to a certain extent, right? Do you reckon by your conversation that that's the pattern that might continue? Because China is still very cheap relative to India even now?
No, that's a fair point. I think the point really is that the valuation, which was not an issue until December, has now suddenly come back to haunt us. So because there are alternatives. I mean, not just China, but even look at Korea. Korea has taken in $16 billion year to date. So that's a gigantic number. So my point is that I don't see foreign institution investors coming back in a hurry. They're very pleased with India. When you look at their total holding in India of $900 billion, mark to market, I think as of last week. So if you look at that number, selling $4.3 billion is really not that big a number. So I don't think we should be concerned about the fact that foreign investors may be uncomfortable. I think they're comfortable. It's just the absolute valuation is now become an issue because they have a choice. When they didn't have a choice, India was fine. Now that they have a choice, India is looking expensive.
Okay. So what happens from here on over the course of the next 6 to 12 odd months, Gautam? Do Indian markets kind of stay range bound because there is a continuation of policy, but it's an expensive market? Or do you believe the street will be, as you said, enthused by this, and we may continue to stay in the expensive zone and move higher from where we are right now as earnings trickle in and as the market gets closer to maybe even FY26?
So, here's the point with respect to earnings. Let me address that first. I think on an earnings perspective, nobody doubts India's, still probably the best, from an earnings perspective, the best large economy in the world. GDP-wise, we're still the best performing for the last 3 years and will continue hopefully for the next several years in terms of absolute GDP growth. Having said that, if you look at the earnings growth consensus earnings growth estimated for India and China, they're pretty much in the same ballpark for the current financial year, i.e. 14 to 15%. So earnings growth in other markets also need to be considered before, being happy about what we're doing in our home country. So that's one. Second is, I think a lot's going to depend on, I don't think it's so much to do with portfolio allocation. I mean, if somebody else allocated, a certain ministry, I don't think that's necessarily going to impact the market as much as the fact that what is going to happen with respect to domestic flows. And will the domestic flows continue at the same pace that they've been, which is about 20,000 crores or so in SIPs? Of course, that's a gross number. It's not a net number. But the fact is, this market is being propped up in terms of valuation, as we all know, by domestic flows. And I don't mean just the money coming into mutual funds, but also money coming in directly from family offices, AIFs, PMSs, etc. So if you look at the collective domestic flows, it's beyond that 20,000 crores. I don't have a number to it, but that's a much larger number. So the point I'm trying to make is that will the government, and there's a lot of froth, as we all know, in the F&O market, will the government and the SEBI take steps to control that froth? And if that happens, you will see a correction. Frankly, a correction in the market would be actually very good news for a lot of fund managers, including myself. So if that were to happen and there's a pullback, I think incrementally you'll see more money coming in. I think the central point which the government needs to address, and as does the SEBI, is that we've seen in the last 3 years a whole new class of investors entering the Indian equity markets. We've seen the financialization of savings in a very massive way, right? But the new investors who've come to the equity markets for the first ever time, either they're investing through their mobile phones or their laptops, which is incrementally 90% of the way people are investing. They can't get burnt. These are new investors. I think we have to make sure they don't get burnt and don't lose a lot of money, because some of these people will then never ever come back. You want the equity culture in India to spread, not contract again. So I think my view is that if the government takes certain steps to rein in the exuberance which is there in the F&O market, and of course that would immediately impact the cash market, would be actually good in the long term.
Wow. Okay. Well, viewers, we have people who believe that some measures could actually be great as well, or warranted over the long term. So keep that in mind. A lot of talk around whether the budget can do something around the derivative piece specifically, though they are only in the maximum tax bracket. So don't quite know what will happen. But we need to slip into a quick break on that note. Maybe we'll continue this point and talk about some other points as well as to what, from a viewer's perspective, what is it that Gautam Trivedi is thinking about portfolio strategy. Now maybe we talk about that with him on the other side of this very quick break. Stay tuned. Back with Talking Point right here on NDTV Profit in conversation with Gautam Trivedi. And, well, he's spoken about how the longevity of the bull market and the breadth of the bull market is very important. And let's see if there is some action or some measures taken to bring off the very rapid evolving trading, speculative culture, if you will, as well. Maybe in the right spirit. So I think we'll wait for the budget maybe to come out with some of those ideas. Now, Gautam, with the belief that something like that could happen, or whatever else, are you doing any major tweaks to your portfolios in the period between now and the budget, or would you do all of that only once the budget measures are out?
The budget's probably about 3.5 to 4 weeks away is what I hear, assuming it's in the first week of July. So it's not that far away. I think there have been a lot of research, sell-side research reports coming out saying that, go easy on some of the sectors that have outperformed, whether it's, some of the government companies, defense, railways, which have really done very well, multi-baggers as well. So, and there's talk of, getting into underperforming sectors. So pharma will do well now, as will FMCG, if the government now starts to focus and create more rural opportunities and rural income opportunities, should I say. So I think there's chatter around that, but I don't think anybody has a handle as yet Even when I today talk to people on the ground who are either with FMCG companies or in the consumer-facing companies, there is no significant pickup as yet. So we'll have to wait and watch to see between now and the budget, or even after the budget. I mean, budget's not the only time to do this, but what are the steps the government does take to alleviate the rural consumption? So it's a wait and watch, frankly.
Would you preempt, and therefore would rural focused themes come back in portfolios in a meaningful way? Because we saw FMCG gain a little fits and starts and then came off as well. We were speaking to Bajaj Auto just before we started talking to you, and they were hopeful of some more upticks in the times to come from the domestic, let alone exports. Is the weightage of rural focused themes slightly more than what it was, Gautam, in your portfolio?
It's all changed literally in the last few days since the election results. And that's the reason we've seen a lot of these rural plays spike. Mahindra, of course, has gone through the roof, had a new 52-week high last Friday. It's a great company. I'm just giving you an example of how some of these stocks are doing. So I think the market has started to preempt some of those actions that the government could potentially take. But honestly, I think it's a wait and watch. And frankly, if you miss the first 10%, doesn't mean there's more juice not left in some of these stocks. So I'd rather wait and watch and see what steps the government takes.
I mean, as is the case with every election outcome, some of the some linkage stocks tend to do very well. We saw this whole focus on what the TDP could do in infrastructure in Andhra, leading to some of those stocks do well. But I just wonder if indeed the capex push and the infra push continues, not just in Andhra, but the rest of the country as well. What about some of the commodity names which are ancillaries, cement, steel, etc.? Do you think they come into flavor?
I think your theme about capex plays will continue. Whether you like it or not, the government has been for the past few years and will, I think, continue at least for the next couple of years to be the big spender in the economy. Private sector capex outside of the top 10 large industrial groups, we don't really hear that much. A lot of the companies that we've been talking to over the past 12 months have been more focused on reducing debt. So if you look at the loan books for most of the private sector banks or even the public sector banks, we haven't seen that big a pickup as yet on the corporate side. So my view is that the capex burden still continues to fall on the government of India and the state governments. So that theme will not necessarily change. As far as cement is concerned, my concern really is the absolute supply that's coming in and the inability of the cement companies to have any major pricing power. So in the absence of that, you still may get I suspect, 7 to 8% or maybe even a 10% growth in the stocks. 10% seems unlikely, but more high single-digit growth in the stocks, but nothing that's going to give you a big burst that you've seen over the past 3 years.
All right. Where is it that you are most confident of? Because I come to you with the knowledge of how you've said that your feedback suggests that there is money flow that has happened to China. It may not be necessarily over. We're still a month away from the budget and some policies could come in as well, which might impact portfolios. Where are you most overweight at the current point of time, Gautam?
So we are a special situations fund, so we're not necessarily overweight a certain sector, and we don't approach it from that standpoint. We look for the incremental change or the catalyst that's not today priced into the stock. Things like change in ownership, change in the CEO, i.e. new management coming in, bringing in their whole new team, any sort of change at the corporate level, deleveraging, M&A, IPO. So those are the things that we look for. Also generational change, a big event for us. So our strategy is actually quite different from the average fund that is, looking at growth or doing sector rotation. So we're not really in that game. So like I said at the beginning, that I think sectors that have underperformed, chemicals, again, big one. I'm not saying it's a buy. All I'm saying is that, it's time probably to relook at some of these sectors which have been underperforming and are cheaper than the rest of the market.
Point well noted. Would banking fall under that view? Because I heard you say that corporates are deleveraging. So therefore, if the balance sheets are healthy, they may not necessarily resort to very large bank credit, if you will, but they can figure it out to do it in that fashion. And I mean, I don't know if banking also, if there are special situations out there. But even if they are not, do you have a view on banking by and large?
No, I do. I think banks, private sector banks would be, if you do need to put money, I think private sector banks are starting to look very attractive. Who would have thought HDFC Bank would be trading at 2.1, 2.2 times price to book forward. And I think the PSUs have had a great run, but I think the valuation gap between PSUs and privates may still continue for a while. So it may be time to start dipping into the private sector banks because of the sheer valuation, but I don't expect spectacular results. Of course, there's been chatter about MSCI-led changes that will bring in a lot of money in certain banks. That is a technical reason. That's not necessarily so much fundamental. But if that were to happen, that would be very positive for certain banks in the private sector.
Mm-hmm. Okay. Gautam, last question, and that is on information technology. Now, a bit of a conundrum people have because of the whole AI thing, not linked to the government at all. And the opinion is divided right down the middle. More bears than bulls, though. Are you, which camp are you in?
I'm in the camp where we thought the Indian IT companies would find a way out of the situation that they're in right now. And it's not really so much their fault, but the fact is, if you've got a third of the IIT batch which hasn't got offers, that clearly tells you how tough things are. And the IITs are not just the best in India, but best among the best in the world in terms of engineering talent that graduates every year. So there is clearly a problem with IT services, and whether it's AI or whether it's something else that's going to change the fortunes of Indian IT companies, we don't know. I think it's way too early. The Infosys CEO, Salil Parekh, did allude to AI being a great opportunity, but I don't know if it's early days or how will they reposition themselves. I think historically, Indian IT companies have done a great job of reinventing themselves when times are tough. They did great with Y2K, if you remember back in the day. But can they pull something off? I don't know. I'm not qualified to answer the question, and I'm just going by guidance of what I read in the papers by some of these CEOs. But I think Indian IT should make a comeback. When that happens and what course it'll take, it's too early to tell.
Yeah, well, maybe that's the most fair answer, Gautam, because I don't think too many people know really what's happening out there. But thanks for taking the time out today. Great having you. And well, we look forward to the posts as they come in, but really appreciate your time, Gautam.
You're welcome. Thank you. Bye-bye.
All right. And that's the view from Gautam Trivedi of Nepean Capital. And that's all the time that we have.